Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, August 3rd, 2019. In this week's reality check, I wanted to talk about the goings-ons last week in the U.S. Central Bank and the fact that even though we had a much anticipated and almost certain Fed funds rate cut, which we did in fact get of 0.25%, the market was very, very upset with Mr. Jerome Powell, the Fed chairman, because of his language post meeting. And Chairman Powell said that the move to lower rates was designed to reduce the downside risk of those factors to the continuation of the U.S. economic expansion. So I think what the market was looking for was that with the economic news and the perception that lower rates leads to higher asset prices, we do know that as a fact, or at least that's been the case over the last 10 years or so. We've seen this uninhibited, unprecedented money printing and management of the economy by the Federal Reserve. So I think that when Chairman Powell comes out and says, "Well, we're doing this to, for insurance against downside risks," look, this is all kabuki theater. This is all bull crap. Okay, these central banks exist for one thing and one thing only. They're not there. They're not like sitting there. Like they're the masters of the universe and they're doing all these, calculations with supercomputers and slide rules and determining, yes, if we lower rates by 0.25%, this will do this. They don't have a clue what they're doing. They've got an unprecedented asset bubble in just about everything. Okay, and the problem they have is that the U.S. dollar is going up because the rest of the world is in a massive rate cutting cycle. I've pointed this out in previous blog posts and in previous videos. You can go to the Council of Foreign Relations website and they track interest rate or central bank actions. Okay, and they have a meter at the bottom. It's centered at 0 and then it goes to plus 15 and negative 15. Negative meaning, more countries cutting, positive, more countries raising rates. And right now, most of the countries around the world are cutting rates. That's why we pointed out before last week or the week before about how gold was breaking out in just about every single currency around the world. And so you got Jerome Powell sitting over here, student of the 1970s and early 80s when we had, high double-digit inflation. He's not from the old school like Greenspan, Yellen, and Bernanke, who knew that their commission or understood their commission to be to do whatever they had to do to stop a 1930s deflation from happening. That was their mandate. That's the schooling they came up in. And Jerome Powell came of age during the 60s and 70s, and he saw the inflation that was caused by central bank largesse. So that's why I think has that mentality. What the problem is that rates need to be cut. I mean, the markets, the economy, the government is addicted to lower rates. And so we have this rate differential where the U.S. has rates substantially higher than quite a bit of the rest of the world, especially the industrialized world, where most of the rates are at 0 or negative rates. And so it's very easy if you're in Japan or Switzerland or in the euro to, borrow at 0 and then invest that money into U.S. treasuries and do it at leverage, and you're 10 to 1 leverage, and you're doing that's a pretty good trade. So you have all of this demand for dollars, and it's creating, because of these interest rate differentials and the perception that the U.S. economy is doing better than most of the other OECD countries. It's certainly doing better than Europe and Japan. So, not to mention the ongoing trade dispute with China, whether or not it's actually, how much effect it actually has on either economy, I don't believe it's really that much in the overall scheme of things, but it creates a perception, it creates uncertainty, and it causes more people to flock to the dollar as a store of value. Whether people believe that or not, that's, you can't put hundreds of billions of dollars of money instantaneously into gold or other hard assets. Okay, but you can put hundreds of billions of dollars into the treasury market or into the US dollar at the flick of a switch and not really move it. So that's why there's a demand for dollars. And this thing's starting to get away from them. I mean, they're sitting there with these interest rate differentials. The dollar's getting ready to break out. I'm going to show a chart of that coming up. What does that mean? Well, it means lower commodity prices. It means lower oil prices. You say that's good. Well, the problem is that the Federal Reserve says they have a 2% inflation target. How do you get to a 2% inflation target if oil goes to $30 a barrel and copper goes under $2? Not only that, you have tremendous amount of third world countries and second world countries, call them emerging market if you will, that have a tremendous amount of dollar-based, dollar-denominated debt. So as the dollar goes up, you have the chance of the seams giving way on this sweater. What I'm trying to say is, if the dollar goes up and your debt's denominated in dollars and you're in the Philippines or whatever, or in Indonesia or, one of these other countries, the ability to service the debt gets harder and harder. So you could have a crisis start. And, Mr. Powell is behind the curve. So when he came out and said, well, this is insurance, like I said, it doesn't really matter. I think gold is sniffing this out. The U.S. economy is slowing down like the rest of the world economy. We're going into this massive, like I said, you can track it, interest rate cycle, money printing. I don't want to call it money printing, currency unit printing. And, the rest of the world's cutting rates, and we just can't sit here and not cut rates. Otherwise, relative to the rest of the world, the dollar will get stronger. And if it breaks out, you know what happens with the algos. You'll get a ton of money coming in, and the move will be exacerbated to the upside in the dollar, which really could trigger one of these tripwires in commodity markets or in these debt markets overseas. Not only that, a higher U.S. dollar makes it harder for U.S. exports to be more competitive. And whether people want to know it or realize this or not, we're going to have more currency wars. We're going to have competitive devaluations. We're going to see more of this as all these different countries struggle to get their economies going. The last thing that the powers that be want when you have record asset bubble going on, it's something I think I heard on the other day. A guy said in an interview, it was like $110 trillion in U.S. household wealth. And the idea was get the stock market up, get these real estate markets up. That makes people feel wealthy, and they're more apt to go out and spend money and borrow money to buy things that they can't afford. And that's what they've been doing. And we're getting to the end of that cycle now. So, we have all these various we're like in a minefield walking around with a blindfold on with no clue what's going on. And, this whole idea of this central banks determining what the correct interest rate should be is no different than, Gosplan over in the Soviet Union trying to determine how many toothbrushes should be made every year or how many pairs of size 8 shoes should be made. It's stupid. If I sat here and told you I was going to create a board of professors and academics and people with no world experience to tell you how much the price of canned peaches and light syrup should be, you'd think it was absurd. But everybody sits here and hangs on every word of these people like they have some kind of insight that the rest of us don't have. They have one hammer. That's to either be able to print money or don't print money, to lower rates or raise rates. So every problem, they have these two big hammers. There's one big hammer because it's basically the same thing, creating money out of thin air. So they have this hammer, and so every problem looks like a nail. And that's all they can do. Raise rates, lower rates, raise rates, lower rates. And all they do is create and then blow up the economy. We have no free market. We do not have socialism. We do not have capitalism. We have what one guy calls, I forget the guy's name, I'll look it up, but it's called creditism. And the way he explained it, he's exactly right. Now, I don't have time to get into that, but the bottom line is that I don't care what Powell says. We are on our way. This is the beginning of the next rate cutting cycle. And we are headed to the zero bound because this economy is slowing down. We're coming into an election year, and the pressure is going to be on. And the first hint at the economy slowing down, we could get ourselves into a problem here. and they're going to cut rates. And like I said, gold's sniffing that out. Here's a chart of the dollar. You can see over here on the right, you can see the dollar's been making higher highs and higher lows, and it's trying to make a move to break out. If it breaks out here, it could very easily run to these previous highs up here at 104. I mean, that would be devastating to commodity prices. It would be devastating. It would put a lot of pressure on emerging market debt that's denominated in dollars. We could have a blow up. They don't want to see this happen. You start getting into a disinflation or a possible deflation. But I think that, gold doesn't believe Chairman Powell. Look what happened on Friday. I mean, you've got a situation where, or at least in the last week or so, that even though what he said, gold still made a new high. Now, it's overbought. I grant you that, and it's probably going to pull back. It needs to pull back and consolidate. It's way above its moving averages, and its RSI is way out of bounds, and the MACD is way at its top end of its range. So I could see pullback. But I can tell you that I think gold is seeing what it's seen in all these other currencies around the world. As it continues to make new highs in all these currencies, this total amount of debt around the world is in the, trillion, 250, $300 trillion. And it's not going to be paid back. So what are you going to do? So I think that there is a great opportunity here. This is kind of setting up perfectly. I mean, gold is sniffing this out. You're seeing, commodities. I saw another thing where that chart that I usually show of the commodity indexes as it relates to equity prices, it's now at an all-time low. I mean, commodities are the cheapest they've ever been relative to stocks in history. And you're right at this, starting gate where or at least this cycle of we're going to see all this money printing. It's setting up almost perfectly. Now, that's not going to happen in the next week or two. Some of these things have been weak. Oil got clobbered last week for 7%, which is one of the biggest one-day decreases in the oil price just based on a tweet that Donald Trump made. So, we have to watch the dollar. We have to watch what this Fed's going to do and the language they use. But what we're seeing around the rest of the world is, uninhibited money printing. And that's, if the U.S. doesn't follow along and go along with this, there's going to be a bunch of problems, not only here in the U.S., but around the rest of the world. It could precipitate a crisis. So that's why, I don't believe Powell when he says that this isn't the beginning. He has to say that. Otherwise, these markets would have been screaming higher. And the bubble, the asset bubble would have been, I mean, they're on a tightrope now. They've painted themselves into a corner, these central banks, over the last decades when they started doing this money printing, when they started doing these QE. And many people warned. I remember listening to Jim Rickards, Peter Schiff, all these people laughed at these guys, and they have painted themselves in a corner. You are not going to be able to get out of this now. You have to print money. You have to monetize debt, or the whole thing will completely implode into a deflationary spiral. And I'm reading more and more. I'm reading Ray Dalio's book, and he's talking about the Weimar hyperinflation, and the German central bankers are quoted in there. They knew they were printing money out of thin air and creating inflation, but that was more beneficial, or they thought less evil than allowing a debt deflation. So, I think longer term, I think we're in a new cycle, up cycle for gold. I think we're going to make new highs eventually. I'm pointing out, we already had one royalty company in the Actionable Intelligence Alert newsletter portfolio. I just added a junior miner, and I don't normally mess around with junior mining stocks because like I said before, mining sucks as a business, and especially gold mining. But we are getting ourselves in a situation, I think, where gold's going to move tremendously higher. People are going to be moving into it. And I think that this is one of those times when you can catch a wave. And if you have the gold price in your sales as a producer that's increasing production or just getting ready to go in production, I think that your stock can make a real big move higher. And those are the kind of stocks now that I'm trying to move into and looking at. We just added one this month. So had a question. A guy wrote in, one of the listeners, guy that watches our videos here, and he was asking about, he sent me an article, it's from a couple years ago, but it was a article about the demise of the Canadian oil sands and, what I thought about it. And what I think about it is that I think, again, I go back to what's reality. We hear all these governments say all these things. I mean, I don't know why people quote politicians or even listen to them. They'll say whatever they need to say. They stick their finger up the wind, lick their finger and stick it up and see which way the wind's blowing. Okay? Climate crisis, all this bullshit, electric vehicles. It's not going to happen. It's law of large numbers, people. Okay? Go look at the BP Energy annual energy review. Now, as soon as I say BP, people will say, well, that's the people that blew up the Texas City refinery and had that offshore accident. Why would I listen to them? Because, the reason why is because they gather all the data. That's the business they're in, is energy, and they put out a report every year, and it's true and correct. It's used by a lot of people. If you don't believe them, go to the IEA, and they put out a similar report. And what it says is that energy demand around the world is going to continue to grow. It also says that oil demand is going to continue to grow. Okay? It also says all energy sources are going to grow. Last year, as a matter of fact, coal use actually went up around the world. Why? Well, let me explain this again. People at BP and Exxon and Peabody and all these other places don't produce these things because they're trying to poison everyone on Earth. These things enable civilization. Okay? Has anybody thought any of this stuff through? I don't think so. It's, people react emotionally and rhetorically and, call somebody else a name, and they don't have any of the facts. I'm not going to go through this again. Suffice to say, how are you going to provide food for 8.5, 9 billion people without petrochemicals, without insecticides, without pesticides, without tractors that run on diesel? How are you going to run the combines? Off a battery? Have you ever seen a harvest going on? These guys will run 24 hours, 24/7. When are you going to charge the battery? How are you going to get the battery charger out in the middle of the field? How are you going to have shipping going back and forth across the ocean? How are you going to pick the trash up every week at your house? These are all diesel powered. Now, I'm not saying we're not going to see more electric vehicles. We are seeing electric vehicles. But here we go again. Now we run into another math problem. Where are you going to get all the nickel? How much nickel, cobalt, and manganese are in an typical battery that's in a Tesla or one of these other vehicles? Do you know? If you don't know, you shouldn't be blowing. And if you start putting that into a spreadsheet, then you start being able to determine how much if you're going to transition the vehicular fleet around the world, which is in the billions. How big is the vehicular fleet? How much battery metals are you going to need? These batteries don't last forever. How are you going to recycle them? Where are you going to get the steel to make the wind turbine towers that are, 90 meters high? Do you understand the steel making process? Do you know what metallurgical coal is? Do you know what coking coal, how it's used in the steel making process? Do you understand how mining takes place and what's used to mine? Yes, some of the mining tools are electric. They run big cables out to some of the strip mines in the lignite fields that they're using in Germany. But they still have to have haul trucks. They still have to need maintenance. They still need grease. I mean, nobody thinks this stuff through. Now, the oil sands are going to go away. The oil sands right now are so depressed, they represent probably one of the best values in the entire investment field. They are crown jewels, okay? What's happening around the world? If oil demand increases, it's 100 million barrels a day. It's 3 billion barrels a month. It's 36 billion barrels a year of demand, worldwide demand that's growing every year. Now, if you have some psychotic break in the markets, yeah, you could have a year or two where demand is flat or goes down, but it's relentless. Why? Because industrialization and urbanization. And as people get wealthier, They move up from the bicycle to the scooter, from the scooter to the motorbike, and then to a small car, and then to a bigger car, and then they start traveling. I mean, air travel is exploding in China and India. I mean, these are math problems. You can figure them out. We know that at a certain per capita income level, people's energy use starts to go exponential. It's not me, wanting this to happen or wanting CO2 or wanting pollution. I'm just telling you this is what's going to happen. It is happening. There's nothing going to stop it. I mean, it really bothers me, these freaks that are in the West running around, this Greta Thunberg girl, they put her out there. Why doesn't she go to Beijing or Mumbai and talk like that? They will literally beat the crap out of these people. These people are industrializing. That's where all the emissions growth is coming from. But we're going to sabotage our economies in the West over this new religious fervor that we have. And that's fine. I mean, it's a world economy. I can exist anywhere. I can make a profit anywhere. And I'm going to. But no, the oil sands aren't going away. As a matter of fact, they will be known as, they will ultimately be saviors of civilization. When the 6 counties out in West Texas peak, which it appears they might be doing right now or in the next year or two, and we don't see all this so-called shale miracle that's going to save us from having to import oil. So people just don't understand the numbers. They choose not to because they have some people have a preconceived notion, or they have a political view, or they have they've substituted worship of earth and the environment for, a god, whatever. And this is what you get. So I think people should look at the current Goehring and Rosenzweig. Leigh Goehring was interviewed by Jim West. I'll put a link to it. And he talks about these energy transitions. He talks about when he was in France and he saw the riots and he's, and the pushback that people had about, getting rid of diesel and going electric. He talked about, he talks about the same thing, about energy transitions. And Vaclav Smil talking about, how societies do not go from from more dense energy sources to less dense. You go the other way. You go from less to more. And Leigh Goehring uses the example of the Concorde. The Concorde, a lot of money was invested in the Concorde. It's a supersonic jet, could cross the Atlantic in like 3 or 4 hours, and it was tremendously expensive to develop, and it didn't ever make any money. And, but it was the new technological thing, and all the celebrities and all the rock stars and all the wealthy people were on it, and they were always being photographed on it, getting on and off, and the thing never made money. Why? Because it wasn't, the energetics, as Vaclav Smil says, were not economic. And it's the same thing you're seeing today with like Teslas and the rest of these things. Who's pimping these things? Who's driving them? Wealthy people, actors, executives in companies. The guy that's buying his first car over in, Indonesia is not going to buy a Tesla Model 3. Okay? That's not how it works. So I'll put a link to that. Suggest you take a look at it. Not much to talk about uranium this week. I mean, it is what it is. We just sit here and wait. And not a lot of news to report. So that's it for this week, guys. Thanks for listening, and we'll talk to you next week.